Welcome to the September Spotlight on Insurance and Property Casualty Coverage, brought to you by ProducersWeb.com. I'm Paul Wilson, and in this broadcast we'll cover some of this topic's biggest trends and most insightful research. This Spotlight on Insurance and P&C is sponsored by Brokers International, one of the nation's leading marketing organizations. Experience the new world of insurance marketing at www.biltd.com. Tough economic times often lead to an increase in suspicious claims, and it seems the past few years were no different, according to new data from the National Insurance Crime Bureau, or NICB. During the first half of 2009, the NICB saw increases in almost all referral categories compared with the first half of 2008. According to NICB President and CEO Joe Worrell, quote, "While there has been modest improvements within a few categories of referrals, the overall numbers of questionable claims for the first half of 2009 is 13% higher than it was at this time last year," unquote. During the first half of the year, more than 41,000 questionable claims were referred to the NICB for investigation by insurance companies, up from 36,743 during the same period in 2008. The highest surge came in auto claims, as suspicious car fires rose 20% year over year, auto glass claims climbed 76%, and so-called phantom accidents rose 46%. Finally, in the property casualty sector, slip and fall accidents increased by 47%. Standard & Poor's this week announced it will maintain its negative outlook on all North American insurance sectors, with the exception of reinsurance. The negative outlook has been attributed to most insurance lines since August of 2008 and will likely remain for the next 6 months, according to the recent S&P report titled "Outlook Remains Negative for Most North American Insurance Sectors." In addition, S&P said downgrades will likely be more common than upgrades during the next 6 to 12 months. Overall, the major reason for the $19 billion decline in the property casualty sector's statutory surplus is the drastic loss of equity values. According to the report, quote, "Fortunately, most of the insurers we rate had strong capital adequacy for their respective ratings prior to the market meltdown, thanks to years of very strong underwriting results. Consequently, declining capital adequacy led to few negative rating actions," unquote. Aon Corporation recently released its U.S. quarterly market review for property, casualty, and directors and officers lines, which seeks to identify and address trends in risk and insurance. According to Warren Mula, chairman of U.S. retail for Aon Risk Services, quote, "In this difficult economic climate, it has never been more critical to an organization's overall health and performance to have an effective risk management program in place. With Aon's unmatched resources to deliver fact-based insights, such as those found in the report, we are best positioned to help our clients better manage risks, overcome challenges, and capture opportunities," unquote. The report found that the property sector experienced mild hardening during the first half of the year as a result of the global financial crisis and natural disasters. Meanwhile, the casualty sector remains soft and competitive, experiencing low rate decreases that led to lower premiums. Meanwhile, in the D&O sector, financial institutions are beginning to see large rate increases, while capacity is diminishing and coverage terms are lightening. I'm Paul Wilson, and thanks for watching the Spotlight on Insurance and P&C. To see more video spotlights on your favorite products and practices, find them on ProducersWeb.com and browse by topic.